Jason Katz back with us this morning. Jason, will you explain this rally to me?
Well, look, we had selling exhaustion last week. We saw a 6% decline. And so this morning, you're seeing a little bit of the quiet before the storm. We may not know the result of the election tomorrow, but at least the election will be behind us. We have the Fed later this week that's going to reiterate that they're going to be incredibly accommodative. And look, I think that people know, regardless of the outcome of the election, in one way, shape, or form, we're going to get stimulus.
So you've got stimulus, you've got the end of the election in a couple of days, theoretically, but you also face lockdowns because of this second wave of the virus. Isn't that a negative for the market?
Oh, without a doubt. I mean, last week, I would argue that the vast majority of the selling was as a result of people extrapolating what's happening in Europe will happen here. And even if we don't have the political will for it to occur in the United States, at a minimum, Stuart, it's going to impede global growth. So that was a big part of recalibrating earnings estimates for multinational companies.
Okay, a lot of our viewers are talking to me saying, look, we're a little worried about the very lofty levels of stock prices given an uncertain election. They're thinking about getting into bonds. I don't think much to that because you don't get much in bonds. So what's your opinion?
I think you've heard me say this once before on your network, and that's buying long duration bonds here is paramount to stepping in front of a steamroller to pick up a dime. I would argue that there's far more risk in long duration fixed income and long-term bonds than there is in equities. Fed's making it very hard to be bearish on equities given how low short-term rates are. But with the Fed now averaging inflation, not targeting it, by definition, they're going to let that run hot. All this money printing, the fiscal and monetary stimulus will ultimately lead to higher rates, which will hurt bond prices.
Can I just raise one issue? And the viewers have raised this to me as well. If you get Biden wins the White House and the Democrats retake the Senate and hold the House, that, our viewers suggest, is very bad for the stock market. Would you pass an opinion on that?
I would argue that in the short run, the market is fixated on getting more fiscal stimulus. So I think the initial reaction will be to the upside. Just A, we have the election behind us, and B, 2.2+ trillion in fiscal stimulus will be a foregone conclusion. However, at some point, the rubber needs to meet the road. Earnings have to grow into stock prices, and we're going to wake up to a much higher tax regime. How will the economy adjust to that? Is that moving money from the right to the left pocket of the wealthy to the not so wealthy, or does it create a trickle-down effect that adversely affects everyone? The jury's still out on that, but that's what people will have to contend with the scenario that you've just outlined, Stuart.
All right, Jason, we've got 30 seconds to go to the opening bell, and I see a lot of green on the screen. Jason Katz, thanks very much for joining us. Appreciate it.